Definitely a big change from yesterday to today in the bond market. Yesterday, yields fell ahead of today's FOMC announcement and Powell's remarks. The 10-year yesterday tumbled almost 10 basis points down to 4.324. The 2-year pulled back 4.7 basis points, and the 30-year bond yield, that was down 11 basis points yesterday to 4.86. But this morning, Treasury slumped after a report on GDP, which showed resilience in the U.S. economy, and that was ahead of today's Federal Reserve rate decision. GDP came in at 3% for the second quarter, higher than expected. That was up from a 0.5% contraction in the first quarter. So a 10-year intraday move today. Prior to Powell speaking, saw the 10-year right at about 435. It moved higher to 438. In the CME FedWatch tool, prior to Powell coming with his speech today, there was approximately a 62% probability of a September cut. That's now about 50%. And part of the reason why the Fed may be so reluctant to cut rates, ongoing strong U.S. economy. And a Treasury update. The U.S. Treasury Department said earlier today it does not anticipate increasing auction sizes for notes and bonds for at least the next several quarters. And that's in line with market expectations. And it also announced a $125 billion refunding, and that's from August to October later this year. It will, however, continue to make incremental increases to the size of the TIPS and T-bill auctions. And in a statement, Treasury said it will further sell $58 billion in 3-year notes, $42 billion in 10-year notes, and $25 billion in 30-year bonds all next week. These were the same auction sizes for the same securities, which were announced at the February refunding meeting.